Good afternoon, everyone. BC Richfield here, coming to you live from a very sunny and hot London today. A big shout out to everybody that's watching this live today, as well as everybody that is watching this on recording. So, what is the plan? Well, normally we open up Wednesday's session for our kind of altcoin picks, which we're still going to do. Going to try and kind of compact the session down a little bit to 30 minutes, so it's a bit more easy for everybody to digest or watch back. But obviously, in any market condition with cryptocurrency, you're intrinsically linked to Bitcoin. Okay, Bitcoin, in its sense, although it flips in and out of correlation with traditional markets, is typically led by the risk on and risk off sentiment of the major markets, which will probably have more of an effect now that we have the ETFs. So, one thing I wanted to cover today, as you know, a lot of people obviously been caught offside in this move. Even me, although I wasn't caught offside in it, most of my trading is done on an intraday basis. So I kind of limit myself to these. I limit myself to the big upside of the larger moves most of the time, but I also, protect myself from the major kind of downturns. So what are we looking for, and what is this about? Well, for me, this is our high time frame range. Excuse me. I've got this one focused here because these are the ones that are here. Good morning, Seb. WTF happened last night. Indeed, that's what we're going to take a look at today. So we're going to have a little smattering of news to take care of. But ultimately, as is my game, we are going to keep this mostly on the charts. And hello, Erica. Hello, everybody signing into the chat. Really awesome to have you all here. So why are these the levels that I'm looking at? Well, first of all, let's just take a look, shall we? Just picking points at random, right? So we've got the range high and range low and the mid range, or this could be considered one larger range with this line here, as the midline. Now we can see as you kind of go through these, look what happens here, right? Resistance, This whole area provides a little bit of support, it then turns to resistance, remains resistance. We get this strong close above, same as we get the strong close above the midline. You look for the retest of these levels and price goes up. Now, price deviates here, right? Let me just get rid of some of that. Where does it go down to? Well, it finds support in the midline, fails to get a strong close back above here, comes back down. This is a very sneaky move here that's come up to take liquidity. But once again, when we kind of zoom in here, and you can see this on the lower time frames, you can see that, price gets this big move down, support here, but then this level clearly becomes resistance. So, what's the green box all about? Well, as I said, I've been, I release all my thoughts publicly with the community over at the Bird Nest. I also release my thoughts quite often on Twitter. And I said, look, it's very hard to not be bullish at the moment, right? Because if we look at all the price action, what have we got? Really big move off the lows as this dipped into a weekly level here, an inversion, came up, higher low, higher higher. People still need to remember that Bitcoin could very easily be setting a higher low here, right? This market does have a tendency to overreact. However, also what I said is if we're looking to long, then we're looking to long from this green box, okay? We've taken liquidity above these highs. The market likes to rebalance these gaps. So we look to these gaps to provide the launch pad for price to go long. Next thing I said is if we close below this gap here, then we're coming down to retest this level here at 58,440. Now, as it happens, it closed and retested that level, but it's not really taken any key liquidity on a daily basis, right? So this level down here at 57,787 is really of interest, and something that we often see in here is we might get a relatively benign day today. Really does depend. I think things are very heavily linked to the Nvidia earnings which are out today. So the market could kind of be sitting on its hands a little bit. That's going to have a massive effect on the markets, and we've got no other red folder news affecting the US, which is the key kind of news catalyst that we wait for. However, tomorrow we have the preliminary GDP Q on Q, quarter on quarter, and that combined with unemployment claims could really move the dial. So there's a chance that the market, in terms of the traditional sense, is kind of consolidating here and getting ready for a larger move. Jiho, hello, mate. Super Shogun. Brilliant to see you back, my friend. Been with us a long time. Almost as long as Seb, Erica, and some of the other legends. And Sebster here. as well. What have we got going on? Let's have a look. So does this dump bring all the liquidity down to 56k and below into play again? Yeah, so okay, I think it's a really good question, Seb. So I think, first of all, I find it a lot easier to look at these markets level to level, right? And I'll tell you as for why. Let me just turn the session breaks off for a moment. I'm not going to be covering anything intraday today. Now, when I set these levels, I normally favor a 4 hour, right? And on the 4 hour, this really starts, well, to my crazy eyes anyway, this starts to make a lot more sense, right? You can see quite clearly how price goes up to a level, deviates below, comes back here, finds support in this area, and then pumps higher. Finds support here, kind of does a little bit of a liquidity grab here, but then when it gets back below, look at the retest and the sell-off, right? Then price had this big expansion high. It didn't give us any opportunities here. This was a really sneaky deviation. And what I want to focus on today as well is looking at these, which are our inversion gaps. All right. That's when you see these bullish gaps or bearish gaps close through with the opposite candle. It's often a signal that we are getting a reversal. Okay. So one down here, for example, one here that started the move. If we look to the top here, we can see that there's one in there as well. And basically, as you go through, if you look for these large gaps, obviously in better lines than that one, then what you often see is that these are the kind of start of that move. This level then builds a base for price to come back to. But actually, and let me just get rid of these crazy squiggles. Actually, what's interesting me here is this big kind of move here when price really sold off aggressively, got bought back up, trapping a lot of people offside in this move to the lows. So I really don't mind the fact that we're retesting this kind of area, to be honest. I think this is probably a little bit more news driven than anything. I think we've got, if we look at this kind of level specifically, I would say here, right? I think this is a really good level. It's not an order block. It's nothing like that. It's just a random green box that shows, the body low from this to the wick high of this move, right? The recovery, the drawdown here. I mean, you could even kind of say, if you were looking at it from an order block perspective, I'd really be favoring this down move before this large expansion, all right? But I'm, quite happy for price to come into here. And in terms of Seb's question, are we kind of going all the way down to 56k? I've been saying for quite a while, I think we could easily do that, right? I really like this swing low down here as well, which is at 56.078 on Binance. And why do I like it? Well, quite simply, it rests within an inefficiency over here that hasn't been retested. The market likes to be efficient, or it has been retested, but marginally. So it hasn't been rebalanced. Moves below these kind of lows and highs tend to have some kind of reaction, even if it's short term. Just to give you a recent example here, right? If we draw this across here, you can see rejection, 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 closes above, fine, comes back below, but then look what happens, almost like a kind of over-under type move. Strong close above, and then look how this area gets retested. That then provides the base. There's an argument now that this is, providing resistance as well. So what does that all mean in terms of what we're looking for? Well, the plan just remains the same here, right? I like this area to come down. I think price could easily come down further than this. If we go back to looking at this on a daily, what would I really like to see today? Well, what I'd love to see today, if I'm looking at this from a bullish perspective, is I would really like to see price do something like this. Have a sharp move down to clear out these lows whilst recovering the range low. Yeah. So that we just a deviation, even if we close outside of it, then, and fail to take these lows, I think, and it's almost certain we'll take this one. I do think we'll head lower, but we could also very easily see a situation like we saw over here, right? Big deviation before price kind of steps back in, finds support here, and then ultimately moves up. The reason I'd like to see this is because I find it difficult to enter with strong conviction unless we're reacting with a key daily level. So the time to be long for me was down here, testing the range low, all right? So as we came into this level here as an intraday trader, that's the real kind of key thing that I'm looking for. Okay, how does price react here? What does it do to tell you that it wants to move? Now, the problem with this one is that the move down was just so very aggressive as we came in that, these inefficiencies above just restricted us from entering positions. However, we've taken Asia's, this red box represents Asia's consolidation. We've taken the lows of Asia, which were also equal lows as well, which we see as a real kind of engineered liquidity pool. Great for kind of planning these reversals or, these kind of reactions. And then actually, I know we're on a low time frame here, but I really do like the V-shaped nature of this recovery. Yeah. Now, if we look again, and we can always sit here, I know people will say, well, you can cherry pick, you can do whatever, but at the end of the day, we have to have our kind of strategies and systems. What I wanted to see here was a bigger gap than this. That was a bearish gap here, right? Closing above that inverts it exactly as we just looked at on a weekly time frame, all right, and a daily time frame to look at how we were kind of looking at that draw backwards. Yakuza Kana, hello, mate, great to see you. And now we've had a really nice strong move up. So quite simply, if anybody is looking at this as on an intraday basis, and again, nothing you will see or hear from anyone in the market is, flawless, but I really like this here. The movement so far showing a lot of bullish intent. Now, the risk here is that we are moving into the news with Nvidia, right? So there's a feeling that price could be getting drawn higher here, only to bat it down lower. Look, if you're trading this in a high time frame, we're going to cover some ideas on that in a moment. But as an intraday trader, or if you're looking at short-term swings, I think it's quite simple. I don't think you want to overthink it. I think hold this, we push up, and we've got lots of liquidity targets higher up and a very big move down to retrace. Also, what have we done? We've deviated from the midline. So what's our rules on range trading? Well, quite simply, if you have the deviation, you come back inside the range. If prices tried to get out, failed, and been snapped back in, the chances are it's looking for the next pool of liquidity. And in terms of range trading, of which, in my mind, across all time frames, the three undisputed kings of that are SC, my good friend Trader Dan, and Trader XO as well. So I'm sure most of you well-learned people on here will be following them anyway. But you can learn so much from those guys. Even I've been around for a long time, and I've learned a lot from them over the years. So if you're looking at it from a range perspective, I think that's a really solid play. If we come down and close below this, we invert it, as we see from our big purple box above, then I think that's the start of the move lower. And then it's a case of kind of zooming out and saying, okay, well, where does it look like that move can take us? And we've got our pre-made liquidity target. So when I say that, I'm looking every day to have plans to trade this both ways, that's what I mean. In the same way that I said, if we invert this, let me just get rid of that for a moment. On the 4-hour scale, that for me is the early indication. We can see that's when we inverted, when we closed below here, right? Now, then I'm looking lower and saying, well, what is price really going to target? Well, if I want a low, if I want to target a low down here, then I just got an embarrassment of riches, right? Might be better for you guys if I do it like this, right? But, untap low. Price was up here at the time, remember? Untap low, untap low, untap low, untap low, untap low, untap low, right? In terms of what's left to the upside, we've got all this liquidity resting here, but the range has told us that we've deviated, we've shown weakness, and now we're back inside. So sometimes, just the reason I wanted to go over that is I think what you see from the very, very best traders, and I'm not including myself in that by a long way, but you see the conviction that they have in their methodology, and whether people agree or whether they don't agree, then they stick by that. And that's why, people, whether you love them or you hate them, if you think they're arrogant, you think they're idiots, etc., you have to massively, you have to give that time. You have to respect it. People that trade with conviction are people that understand their systems and they understand their data. So what's our play from here? Well, on the higher time frames, this to me is super clear, right? This is just ready-made for rejection. Price coming up to rebalance this gap. If we see a move up towards the midline here and we get any kind of lower time frame reversal pattern, so that looks like this, you want to see a key level engaged with. I like to see a high swept, a strong breakdown below the low that took the high, and then look for a retest of this area and trade it down. These are the key moves in terms of what I look for. And, in terms of entry patterns, these are really good, because what happens is you catch breakout traders here and you take out people's stop losses as well at key levels. Price comes back down, induces longs again, right? The whole idea is the people that were short here think they got it wrong and flip their bias. This move then comes out to take them out again for the highs, and then reverses, takes people out. This move down tends to be so aggressive, gives people very little chance to get involved. And then, by that time, what happens? People then panic and they start to short too low into the move. This move is then designed to come out, take that liquidity before price ultimately returns to key levels. Now, you want to, or I certainly want to, make sure that, you know, I'm a buyer when there's blood in the market and I'm a seller when there's too much euphoria, whether that's intraday or whether that's long term. When you see key moves like this, they've got a really nice structure to them: higher high, higher low. Right now, for any of you kind of Fibonacci traders out there, you must have been having an absolute whale of a time, because you've got at least a 50% retracement on almost all of these, yeah, and pretty much golden pocket as well, right? So moving this up to the next expansion leg higher, what happens? Price is a big expansion, holds this, yeah. So 618 to 66 is the golden pocket, and then the 705 and 709, I see them as kind of backstops, really looking for price if it's really coming down into there. I want to see how it closes. Shallow close, long wicks, and then it gives you an indication that it's going up. Again, if we look at the expansion leg here, a little bit of a tricky one, because you could say realistically that this is the low, because we had the consolidation, the move down. Right, this one was really sneaky, because look how it engaged with the golden pocket. Then it gave us the little recovery candle, and then it just absolutely blitzed. But when you overlay the idea of gaps and how they do interact with price, you see the close below here should give you a little bit of concern, right? But again, what happens? These moves down tend to be so aggressive. Remember, like I said earlier, very rarely let people kind of have an easy ride at getting in. So what happens? We have the sell-off. People are then thinking, okay, you know, you want to get long. People searching for everything in the world for bullish bias, or big order block over here. Okay, what do I want to see? Well, I want to see the market shift structure, right? That's the key thing that I'm looking for. What happens? We get the shift here. Price has a nice expansion. People start to get back on the longs, yeah, or people have shorted here into this move down, leaving their stops here, which is much more of a common move. So what happens when we got the stop losses up there? They turn into market buy orders, all right? So people that were getting short here, and let's just kind of use this as an example, and just that, you know, this whole area is this kind of pool of liquidity, and people saying, right, okie doke, we are going lower here. Well, all these market buy orders flood into the market, creating this huge pool, offering you the opportunity to flip those orders. Because look, these major accounts, they're not trying to fill 20, 50 bucks, $100, $100,000. They're trying to fill tens or hundreds of millions in a lot of instances, right? So what do you need to do for that? Well, you need a lot of people on the other side. If person A is here saying, you know, I'm willing to, you know, offer you 100 million, right, in bids, well, you can take the other side of that bet with the asks, fill all your orders at the right place, and then sell off. And like I was saying, look at this reaction, right? When the market made this change, what are people doing? Well, people are often looking for a structure shift. Depends whether you're looking at micros or not. But however you look at it, the structure shift happened here or here, right? And which of those would have given you any decent entry? None of them. And then look how quickly it drops, okay? So what we're looking for today, clean some of this up. What we're looking for today are reactions within here. Yeah, I'm not expecting price to come up and then just have this huge drop. But what I am watching are these highs, for starters, the equal highs that we have here. And as we look at this going up, then if we get anything like that we were just discussing, right? So we've had the move up. Remember the pattern that I just drew. Now we've got this move. We are reacting with a key element because we're in a higher time frame bearish gap. Then if we get that move lower, then I think that's the point at which we look for these lower liquidity targets, right? And this is where you can be a seller. All right. Now, again, as I described, you might just, you know, you might either not get your orders filled or you might not get that trigger before prices really drops. But that's what I'm looking for there until we close above this. If we close above this, there's not much I'm concerned about here until we get to the range high, right? So that's what we need to watch on Bitcoin, right? So let's just take a look quickly at Ethereum as well. So Ethereum, again, really nice clean ranges. Look what we said here. I can just move this down very quickly to sort of like the 15-minute. The reason that we've got the arrow on here, right, and the reason that we were short from up here, we had this reaction. This, for me, this 15-minute gap should have held. We came into this and then we closed below it here. So henceforth, exactly the same pattern I'm just describing to you. We come under, we look for that retest, and we short it down. Now, this one took profit, stops at entry, stopped out, right? But look at what you can do. If you're just watching these and henceforth looking at this, it was a post that I shared. You can go back and check this on Twitter. No offense, not that I really care about people's opinion on Twitter, but I think sometimes it is nice, to know who the people that are really trading these markets are versus the ones that are, just shilling. Look, this gave you a re-entry opportunity. There's an argument that this is kind of the gap that's really capping the market at the moment. I know for a long, long way away from that, right? So not really the kind of major point of concern, but it's going to show you the importance of these gaps and how price interacts with them, right? When you get these inversions, then it gives you a point that you can look at and say, okay, well, how are we reacting once we've got them? Another good example here, right? Bullish gap, price is delivering bullishly. What happens? We take key liquidity above Asia's high, we come back down to the gap, we close below it, we invert it, we retest it, price sells off. Now, not every gap, not every inversion will give you a good entry. Not every gap is there to be inverted, right? But as we're looking at it, it's all about understanding order flow, but also not just that. Like I said, very openly, I was bullish on all of these assets, right? As we moved up before we had the big sell-off. Really, really simple. Henceforth, why I got the big green box there on the 4-hour. Plan was to look for price to come down and find support in this area, right? But to move up. Didn't like the initial reaction we got. So we paid a lot more attention to the 15-minute highs. You can see we even had Asia's high marked out here as a potential target, right? And quite simply, we inverted that 15-minute gap. So for me, it made a lot of sense to, open an intraday short, targeting liquidity lower down. And then, typically I hold a portion of that trade, but I am a very risk-averse trader. It's all in my strategy, my systems, my data, so I know what I get consistently over time. And it fits my personality type, right? So another really big thing that you want to understand about yourself as a trader, I used to be a good swing trader. Well, I used to build very good swing trading systems, in my opinion anyway, and certainly for the opinion of the people that I was building them for and with. But I wasn't a particularly good swing trader because I really didn't like the anxiety that I got kind of taking these positions, and holding them for long periods of time. I found myself having to check the charts constantly, reading updates. People say, yeah, be like a robot, don't care, be strong, be mentally resilient, etc. But, probably written by people that aren't actually traders. Understanding yourself is a really, really key factor in trading. So where are we now? Well, we can see this beautiful range. Again, just got the key parts of the range highlighted here on Ethereum. This has been really, 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 really clean to trade. Quite simply, resistance, support, move above, resistance at midline, support at low, resistance at midline, support below, resistance at midline, came back down to the midline of this range, which again, if you draw this in here, again, it all depends what kind of time frame trader you are, right? Because you don't want lines just clogging up your chart for the sake of it. But look, you can see how the midline plays a part even within this, especially if you start dropping it down to a lower time frame. You can see the significance in here. Going to turn off my good friend and Birdnest member Geo's indicator there, which is just awesome. Just so you guys can get some more clarity. But look at this, resistance, comes above, retest, finds support, sells up, comes back into this level, shows a little bit of initial weakness, but then gets back above. A good tip that I have, so I learned this in my early years of studying SC's work, is, when you're looking at kind of breaking back into a range like this, and you've got this deviation, I think a lot of people kind of jump in too soon here. You want to kind of see a base built here. You want to see this held, and then the safest way to trade this is to look for something like that, for it to establish itself above this level, So, for example, when we had this breakdown here and price came into the range, when we then, really getting bad at these lines, right? Price came in, price now broke down. You're saying, okay, well, price getting back into the range here, you'd want to see it establish itself above that. However, when we kind of came back down below this level here, these were the opportunities existing in here to change this down to range low. All right, so the same way that we had the deviation, price comes up, wait for it to get into this area, trade it up. And again, you see these areas get a nice retest sometimes as well. Looks rubbish compared to how SC does it, but it is something that's always kind of stuck with me. So looking at this here, what does it mean for the moment, right? So quite simply, very much like Bitcoin, so we've had a slightly stronger reaction here from ETH. Price at the moment looks like it's coming to retest the range low, right? Now, if we retest this on the lower time frame, which we get these breakdown patterns, then this gap holds. If we close above this gap, there's inefficiencies up here to fill. But as long as we hold this gap, and I do think it would seem crazy for price to get this close to the range zone. However, look, these lines will never be perfect. The very best of them, SZ, Gang, EXO, people like that, some, you know, they're really more like a box of an area, right? Very hard to do it with a line, but I do like the lines because it keeps the charts looking very clean. But quite simply, we've got two plays today, right? Or I've got two plays. Hold the box, trade it lower if we get the setup. Close above the box with a good, nice, clean, decent bodied candle. And what do I mean by that? Well, you know, you want to see a large candle, right? So see this? This is a really good example, actually, this candle here. So first of all, you can see the momentum of price coming in. Big body candle sets the order block. Decent body candle, long downside wick, comes back up, good body, opens, boom, right? You get a reasonable amount of the body close above. Yes, there's a decent upside wick on this, showing there's a little bit of a rejection, but obviously you wouldn't get into that position if the body, or I wouldn't if the body came and closed below. I mean, look at how price interacted with this. Big body candle, no close above. What do we do? What do we do? Set the bearish pin bar candle here, and then the opportunity to short this, even if you're just talking about it from a liquidity perspective or confirmation perspective, if you don't want to short off the back of that, is waiting for that close below here and then trading it lower. Ultimately, we didn't really come down for any key liquidity here, right? That you can see in lows on the 4 hour. What supported us? Quite simply, we trade it down to the midline of the range. Okay, so just understanding where these key liquidity targets are. So with this one, with ETH, and I imagine it's going to be the same with any alts, we will just take a look at a couple. I had some nice squiggles going on FTM. I think actually be interested to see how they've played out after we covered that on Monday's show, I think it was. Yeah, which funny enough, I think was looking for lower on that actually, but looking for it to draw down into a point to actually get some maybe long-term buyers on that, aligned with kind of our FA team's thinking. You know, they've had a major rebrand recently. There's a lot going on there, very good team involved. Not my area of specialty. I pass that to people that are specialists in that area, and then I use that information, just decant it into my own thoughts, all right? So make sure I got rid of that one range then. So let's take a look at FTM. I think this is on our, here we go. So there's some nice squiggles for you, all right? So again, FTM, looking at this in terms of range players, ignore the squiggles for the moment. We've got some very, very clean levels here. We came up and tagged this, and then this move down here was just telling you that this thing is ready to move lower. Again, what have we seen? We see the inversion here. Not crazily helpful here. It was bullish. Price closed back down low. And also look at that long upside wick there, showing the sell pressure, the aggression of that move down. We got the close below it, which is the first stage of what we're looking for here on a daily basis for price to move lower. We also had our next targets lined out within this low here on the 4 hour. The idea is for price to retest this area here, ideally draw down to the midline, finding support with this gap, and then, you know, getting back, establishing itself above this level again, yeah, build that base, and then we look to trade it higher. So for me with this, let me see if I can highlight those quickly. Okay, now we've taken liquidity out below this low. Great, move that back, show that that's been swept, no liquidity there anymore. Again, the reason I would look for a reaction here is because we've drawn into this. We've got a big inefficiency here. We've got range mid. We know there's buyers here. There's been buyers before. The buy pressure, in fact, around this area was so strong that we failed to get any order pairing in here, which causes these gaps. Price tickled this and then just exploded higher. So this deeper move into this here tells me that the buying strength wasn't enough here, but we've got midline to support us. And we've got this bullish gap that we're in at the moment, and this is a daily gap, right? So a lot of support here. However, you know, these inefficiencies down here are the key. So for me, I would need to see price recover this, close above the immediate bearish gap that's above us. All right, close above that. And then again, bringing the squiggles back into play. That for me, I think is the play here. Or it's certainly the play for me anyway. Let's have a quick look. Got a question here from Seb. And alleged others were shorting against him Do things like this happen? Yeah, all kinds of madness happens in this industry, Seb. Very, very difficult to do it in the traditional markets. You got trillions of dollars a day moving, things like the NASDAQ, etc. You can move some crypto with spare change. But even, the majors, Bitcoin, Ethereum, stuff like that, it's still very, very possible. Look at Luna, for example. Very difficult to see those things. I don't call them this, but they are known as black swan events, meaning that they're just things that you can't really predict. However, that's where risk management comes in, and I've quoted this legend quite a few times recently, Larry Williams, who said one of my favorite things ever, multiple winner of the Robbins Cup, which is, basically the futures trading competition. It's like the Champions League of futures trading, or just of trading. And he won it multiple times, and I think still the record for the biggest margin as well, and the biggest separation between him and the person that finished second place. And he was interviewed, I think, Bloomberg or something like that, and they said, you must be like a generational trader, right? Once in a generation, people like you come along who just see things other people don't see. And he said he absolutely rubbished it. He said, I'm a very average trader. He said, but I'm an exceptional money and risk manager. And I've seen it a lot with people, very, very talented traders who just, you either get cocky or do things and you can lose a year's worth of work in a couple of bad trades if you're not managing your risk. So I know it's the unsexy side of trading, but it is, it does ring very true. So let's take a look at INJ, shall we? Just quickly. See where we are with this one. I think the last time we kind of took a look at this one, kind of got some long-term holdings on this, but actually, this is a big shout out to, I forgot about this, to my boy Julian, who I've just found out actually used to work with us here at the Nest. King Julian MI is his Twitter handle. And I'm absolutely certain he's not watching this show. He is a prince of fundamental analysis, and just found out that we're going to get to spend some time together out in Singapore for Token 2049, which is awesome. But this is where we were buying up INJ, and almost 1,000%. It's something ridiculous. But yeah, great call, great analyst, great dude. Do definitely go and check him out. But anyway, that's all just for banter, isn't it? I mean, this is, again, look, just saying, broken record, but these gap inversions, right? This is obviously on a lower time frame. The key one here is this, right? Close below. Where's price looking to head next? Key liquidity, right? Still looking for this area to hold support. So you intraday trade that. And even with this one, right, you get this gap inversion here as well. Ultimately, this one not as good because you take out the immediate liquidity on the move above. But when you then get this key level for price to battle with, you then look at that and say, okay, well, who's winning this fight? And if you think it's the bulls at this point, then quite simply, you just want this bullish gap to be the level that propels you higher. And if you close below it, like you do here, you look for these retests, and then you look for the next most obvious pool of liquidity. So let's just, don't need those bits at the moment, do we? So let's draw them again. Right, so I want to start with a clean chart here. So let's just get rid of this. And let's just move to a daily very quickly. This will be the last one that I'll do. Okay. No, I had a look at FET as well for you, Yakuza Kano, and then we'll finish up on that one, right? Definitely need to make myself some lunch today before we dive into our live trading session again with members. By the way, guys, I'm so terrible, I just completely forgot. If you are interested in joining us, I know we've got a lot of deals and bits and pieces on at the moment. This is absolutely the wrong slide, but it does go to show that the trading team have just been absolutely killing it. I'm very, very proud of them. We've got 77.8% call success rate this month so far, which we're looking to hold those stats at the end of the month. Been profitable every single month since I came in about 3 years ago. And all of those calls are available for you. All of the statistics are available. Our P&L is available. You get a breakdown of every trade. We have an automated trading system as well called the MBS, built by a very, very dear friend of mine, Pedma7, one of the brightest people out there, in my opinion, and managed by our awesome crew over at the Bird Nest. So if you do want to join us, I'm sure you can find some bits and pieces down in the description for that. I pasted a tweet about someone with an alleged 77 in a Bitcoin trade that was being hunted, but YouTube probably deleted it. Just curious if that was real or potential cause of the dump. Probably not enough to cause the dump, I wouldn't think, Seb. Maybe, but I'd always be very, very wary of that when people kind of show these positions and stuff like that. It could be bait, but you're definitely going to invite someone to try and check that out, certainly in the order book or on chain and bits and pieces. Not the way that I trade, so probably not the best person to advise you on it. And I don't like to speak about things I don't know intimately, but those kind of figures are definitely enough to move some markets. I don't think that's what caused BTC, in my opinion. So where are we with this? Quite simply, broken record, but it's going to look the same on a lot of these. We've got the inversion here. First signs that price isn't holding these kind of launch pads for price to move higher. We've also inverted this. It's a much skinnier gap. We're now retesting that. Quite simply, close back above this. I think we move higher, but remember, we close back above this. This will become itself a bearish gap. Hold below this, and then I'm just looking here, but probably more so to here because this is the more clear and obvious low. So downside target 17.556 and 17.272, close above here, and I still wouldn't be bullish until we close back above this, right? Unless, well, actually saying that if we create a bearish gap here and close above that, then I think ultimately we're heading up here for 22,975. Again, I do think, I wonder if there's anything on the news here that's going to move in. I'll finish this first, then we'll just take a very quick update, look at the news in terms of seeing if there's anything coming out of interest. Now, 4 hour, we get an even better granular look at this. I think this is the play on the 4 hour. We draw up into this H4 fair value gap, which is bearish, right? So again, I don't do this on my chart, but it's just it gives a good visual representation, hopefully for you guys, and a good way to do it, because then when you zoom in on your chart, you can say, okay, we're in a big red box. Should I really be longing here? And you do you. At the end of the day, it's certainly not financial advice. But a wick up into this, followed by a close below. Yeah, remember, this is a daily level. The price can go all the way up here on the 4 hour and still come back down and close below, and this can be a wick, yeah? While we hold this box here, we're looking for lower. Close above this here, and then I think we're moving up to retest this area, and we target these highs here, which are roughly starting about 21.216. Right now, what I just want to look at here is to just go on to the NASDAQ. Let's look at the main contract here. 1 second. Just get rid of this stuff. Oh, well, doesn't really matter. But look, high time frame, external liquidity, and this is just from one of our instruction sessions. What I'm interested in here is this, right? So really kind of basic kind of news sources they bring these from. It gives you a good kind of snapshot. I always tend to look to Bloomberg and bits and pieces like that for the news, as well as other kind of news aggregators. But looking at this, what it's saying here, NASDAQ 100 mini futures are trending up at plus 0.12% this morning, as market participants refrain from making big bets ahead of highly anticipated earnings from NVIDIA. Yeah, AI darling NVIDIA. Now, what you need to remember is this makes up and has been propping up a lot of the NASDAQ and S&P 500's very big, aggressive, boomish moves. Now, a lot of people are saying about equities being overextended and also about the DXY being oversold. Both of these things are true, and I did videos on them at the beginning of the week. However, very hard to fade, this when it's so strong, all right? But do have a read through these, because what you need to remember is, Bitcoin, crypto is kind of put in with these indices in terms of its risk categorization is the word I'm looking for, right? But it's even riskier. It's like a beta risk asset, basically, right? So when you look at these and you're looking towards these kind of stocks and the technology, your major players are going to be kind of putting their money in these markets here and looking at the technology bids, or, obviously the asks. They're either looking to be long or short this. And at the moment, all eyes are really kind of looking at NVIDIA today, okay? So keep an eye on that, or I would recommend keeping an eye on that anyway. Let's just finish up on, what was it for our friend Yakuza Khan Effect? I'm already 10 minutes over what I meant to be. Timekeeping is terrible when I'm online, but then I do talk too much. So this was the range play we were looking for on FET. I think we covered this. This must have been last week or so, but really, really clean range here, right? Kind of kept in the upper half of this. I mean, this in itself being a range, right? You can see how wonderfully well the midline here was respected, right? Look, resistance, etc. You know the deal. And again, our lovely little squiggle. So we came back up, Let me just see if I can hide that for a second, and then we'll put it back on the chart afterwards. Because this is what I wanted to show you about this. Remember, look, when you have these range breakouts, here's the breakout. Most of the time, or very, very often, price spends, I think, late 60 to 70% of its life ranging, I believe. If I'm wrong on that, please do let me know. It's stats from a long time ago. It'd be really interesting to see it. And obviously, it's market dependent. However, did price, once we set this high, establish itself above it, like we said, and then give us those opportunities to get in? It absolutely did not. Did price establish itself above this high? It absolutely did. Up, retest, and away. And within this, you will see this kind of move here, right? I'll get rid of me crazy squiggles. And not all the time, right? Definitely not going to kind of say to you, oh, you 100% will get that kind of sale. Because sometimes you don't. Sometimes price just absolutely rips. But, you know, opportunities to get in down here, opportunities to get in here. Depends what your entry mechanisms and stuff like that are. But, you know, maybe this one ran too hot for you. Probably would have been a kind of market order unless you're doing this on the lower time frames. However, nice consolidation, strong move above. Someone that's become a friend of mine and a great trader for us over at the Bird Nest, a chap called Just Pit. You guys really should follow him as well. Let me see if I find his Twitter handle. I give him a shout out on most of these streams, and he gets about 3 followers. So I don't know if that's more of I think it's a much more of a reflection on me than it is on him. But give this Chad a follow. I mean, I haven't seen anybody out there trading better than him. In my opinion, got one of the best trading teams around, and we've got some incredible swing traders like the Trading Tank, who's, in my opinion, one of the best traders I've ever come across. And the reason that I want to share this with you guys on here, and hopefully, you know, go and give the guy a follow, is he trades these so well, these kind of breakout ranges, right? I've got a range tool here, I think, actually. Yeah, he trades these so well, looking for the strength on the breakout, just getting involved in the market. I think even SZ or somebody, I remember quoting this, and people constantly pestering about what's your entry, what's your entry, what's your entry. You know, your entry doesn't really matter too much. You lose, you do some good, some bad. The key thing is that you're in the trade and you understand your risk. Yeah. So even like with this one, even if you're saying your risk is under here, and this candle here gives you the breakout with a nice retest, pin bar with a short nose. Let's say, for argument's sake, you went in on that. Where are you wrong? Well, you've got a key swing low below you. Can you get it to the next pool of liquidity to move your stops with at least a 1-to-1 risk to reward? You can. Now you only need a 55% win rate to be a successful trader. Okay. So looking at this, and with that being so successful here, might be worth us kind of applying that same logic here. We're struggling for consolidations here, but I really do like the inversion that we saw here, showing that some strength has kind of come back in. And once again, if I'm looking at this with FET, I just want to see it hold these bullish gaps, really. I don't mind if price comes down below it, sweeps some liquidity and closes back above. I don't want to see closes below. Otherwise, these untapped swings lows come into play. All right, guys, been wonderful being live with you again. Really, really big thank you from me. There's 3,000+ people live with us today, I think, which is just an absolute blessing. Have a fantastic week ahead. Do come and check us out over at TBN if you are looking for a really good community, if you're looking for trade calls, which we don't recommend being a reliance, you know, in terms of that. The idea is that you can come with us. If you want to take some of the trading team calls, you can, you know, more than covers any price of membership. But then, you know, it's all about learning, really. We've got courses, information, I think, you know, we all want to better ourselves. It's a constant level to improve upon. All right, guys. So look, have a fantastic week ahead. Do keep an eye on that NVIDIA news today when the earnings drop. See what that does to the market. I look forward to seeing some of you legends, including you, Erica. You are very welcome, as are you, Yakuza Kana, and everybody else. Seb, been great seeing you on here as well, and thousands of others. Gio, my good friend. Thank you all so much. Keep an eye on the NVIDIA news. Okay, I think that would be big. And then do come and check us out at the Nest, or just come and reach out to me on Twitter. We've got loads of free content as well if you go and check out the YouTube channel. Hope you've enjoyed it. Please do like and comment if you can. And I look forward to seeing you all again on Monday.